Okay, the day after Christmas, and we're back. I hope you had a great Christmas. Let's get right into it. The next week and the rest of this week, again, we're going to be seeing light trading volume. Big institutional players taking an extended vacation. In the market so far go up on lighter volume by retail investors after that Fed sell-off. Dow was pretty much flat. It was up almost 29 points today. The S&P was down pretty much, again, flat, down to 2.5 points. Nasdaq was flat, down almost 11 points. Nasdaq Composite. The Russell was up just under 1%, up 0.90%, and the VIX was up by 3.22%. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. Take a moment to do that. I would really appreciate it. I don't have any sponsors. I turn all those offers down. Just a direct relationship with you. I turn those offers down because I don't want to sell you stuff. But I do need your help in order to make it work. So please consider partnering with me today. And if you do that, I thank you very much. The link below to take you to a secured site, and you can donate any amount you want. Thank you. Important things to share with you in this video. I have something really important to say in just a second, but stay tuned. I'm going to be showing you all the charts and what's going on. Now, I want to tell you one other thing. The stock market's rising. We've had the election results rally. We've seen this election. We've seen it with the crypto markets. We've seen it with the stock market. Talked about, again, possible top in December or January. I think that's very likely. If it spills over into January, we could see it go to or close to Inauguration Day, which is January 20th, which is, just 3 weeks and a day from now. We could get a peak just before that and begin to sell. Inauguration Day could be a sell the news event. Why? Why do I say that? Wall Street likes President Trump's economic policies except for the tariffs, but it could be because on concerns of inflation. The narrative right now is we're going to go into this red hot economy that's just going to be roaring. Recession indicators are telling us different. The narrative on Wall Street is, hey, we're getting the Trump pump because we're going to have this big economic boom with President Trump's economic policies. That's the narrative on Wall Street right now and on social media. But the rally getting ahead of Inauguration Day, so-called Trump pump, could be the rumor sell the news. And by the time we get to Inauguration Day, it could be a sell the news event. Why? Why do I say that? Because of concerns about inflation. Now, again, I don't think that the Fed and the bond market should be focusing on inflation. I think they should be focusing on the recession. But I'm just telling you, as I told you, or the Fed reduced the amount of cuts going into 2025. I told you there could be a lot of concern about that. The herd believes that the rate cuts are bullish and they're bearish. Just as the herd believes that narrative, they also believe that policies are going to create huge amounts of inflation. It could be a sell the news event surrounding Inauguration Day in the next 3 weeks and 1 day from now. Food for thought. Now you say, no, President Trump's policies are going to be implemented and they're going to turn everything and we're just going to soar. Look, any policies that President Trump might implement are going to take a very long time to work their way into the economy. Recession signals have already been triggered with the policies and everything that are in place right now. Going to have the recession, and no political figure is going to be able to stop it. Trump is going to inherit a recession, period. It's likely going to show up in Q1 or Q2 in 2025 based on the recession signals that we've already seen begin to flash. I have more to show you. Showing you the different recession indicators. I'll show you some more likely this weekend. Now, for the first time in history, we have the Fed having begun their rate cutting campaign. In September, they have dropped rates by 100 basis points by 1%. At the same time, we've seen the 10-year yield now rise by 100 basis points. First time in history. And as I've mentioned, this is part of the reason why I think Powell is second-guessing himself about their rate-cutting campaign. And, oh, no rush to cut. There's no hurry to cut. We're in a good place, telling us that we've dodged a recession. Well, first of all, the Fed is not the only one that has a say in rates. Now, the Fed dictates short-term rates. They're not the only ones that have a say about it. The long-term rates are set in the marketplace, and things like the 10-year, which have gone completely opposite, the complete opposite direction to what the Fed, the path and the direction that the Fed has been taking, which is to lower rates. And again, all of this leading to speculation. Oh, the Fed making a big mistake now. Remember how previously they were, when long ago, the Fed should be cutting rates, yada, yada, yada. When they started doing it, these same people are now turning, so, oh, why is the Fed cutting rates? They need to be concerned about inflation. You got the Fed worried about inflation. They'd be focusing on the recession. We recently had the market sell off last week because the Fed has now reduced the Fed funds rate estimate from 4 cuts to 2020 in 2025 down to 2. What is this telling us? Okay, the Fed has now started to cut, and they're now second guessing themselves and now trying to reverse course and go, oh, yeah, inflation. And what is the bond market telling us? Bond traders are saying, hey, you shouldn't be cutting rates, inflation. Same thing. Again, the herd telling us, oh, we're going to have this big inflation problem and it's going to need to raise rates back up. And the Fed is now second guessing themselves. And again, I've talked about it. Maybe it's the bond market. Maybe it's the election with President Trump. And again, that's part of the reason why the 10-year yield is rising, because President Trump won the election. Well, the bond market's going, oh, we're going to get the Trump tax cuts. We're going to get the Trump tariffs. So we're gonna inflation sharply rise. Now, don't get me wrong. Inflation is going to rise. And it doesn't matter, because the Fed is still going to cut rates because we're going to have inflation. Exactly what happened in 2007. And the Fed is making the same monetary policy mistakes that they made back then, focusing on the inflation, which was much higher than it is now, rather than focusing on the coming recession, which is likely going to start in Q1 or Q2 of 2025. Oh, the recession signals have already been triggered. Reliable signals. Did the Fed see that? Because they dismissed them. They looking at the deterioration in the labor market that I've talked about over and over again. Fed looks at fake numbers put out by the Labor Department right before an election. Oh, we got a strong labor market. Now they're admitting to some of the weakness there at this FOMC meeting. But as we're moving towards recession, I'm telling you again, Fed should be slashing rates. These people that told us long ago that they should be doing it, they've changed, and inflation, running around with their hair on fire, yelling inflation. Inflation's going to go up, but the Fed is still going to cut. The Fed is going to pause. They're telling us they're going to pause, and the fund futures is expecting a pause. The Fed fund futures is only expecting 1 cut. The Fed is saying 2, and I'm referring to a 1/4 point when they say that, to 2 1/4 point cuts. And I'm telling you, if the Fed pauses and we see the recession show up in the first quarter or in the second quarter, the Fed is going to emergency meeting, and they're going to do an emergency rate cut by at least 50 basis points, which would be the 2 cuts, if not 3, because they're blindsided by the coming recession. So the bond market is worried about inflation, and now the Fed is worried about inflation. Fed's second guessing themselves. We are going to have a recession. Again, like I said, we could see a rally here over the holidays in December or on into January. As I've talked about, I'm looking for a peak in either December or January in all likelihood, because before the recession hits, you're going to get a peak in the stock market. The rate cuts associated with the coming recession, a market top will be associated with the coming recession. That's what's coming next. The bond market and the Fed are all worried about inflation. They're going to be inflation. They're going to be blindsided by the coming recession. Exactly what happened in 2007. I'm telling you, we're going to get the emergency cut. The stock market will begin to top. It will begin to sell off. It'll drop by 20% or so. under 20% or just over 20%, that'll do an emergency cut and the market will bottom out and it will rally up big time. A counter trend rally. That's the way it's happened with the 2000 emergency cuts, or I should say in 2001 there. In the recession in 2001, the market had already peaked, but we did get a rebound. The emergency cuts, and the same thing 2007. But all these recession indicators, the SAW rule being triggered, the uninverting of the yield curve. We know the recession is months away now because of the uninverting between the 10 and the 3-month, 10-year and the 3-month. Everybody, the bond market, the Fed, going to be surprised when recession shows up, and that's going to deal with the recession, with the inflation problem. The Fed raising rates back up, telling us both traders and the Fed are completely oblivious to the coming recession that it's about to start. Stock market's likely going to top here in December or in January, as I've said, and to see the divergences begin to play out. Do we have a back test of this broken trend line, which we have not gotten really the confirmation of fall through? We had a slight close that wasn't really very convincing just below the Fed sell-off day. You need a confirmation of fall through with that. That was a problem with the sell-off back over here, is we never got the confirmation of follow through. We bounced off the 50. We're doing the same thing. I pointed this out previously that, again, you've got the bounce off the 50 here. I talked about this earlier in the week. The bounce off the 50 here, right at it, and here just below it, we've had these bounces off the 50. Did I say 50-week? 50-day moving average. If I said week, I apologize. 50-day moving average. You're looking at the daily chart. We are back testing, and we end up resuming the selling. Then again, and we take out this gap support that we're finding support at right now, just slightly breaching it. You've got your gap fill down here at 57.83. You've got your horizontal support from the July peak over here, which, again, near our 100-day moving average not seen on this chart. Bigger sell-off would take us back towards the 200, this black line right here. But again, is this a back test? Was a reversal or a bigger pullback? Or is it done and we're going to try to make our way above this trend line and try to resume the advance towards the upper boundary of the channel? You know, one thing that's interesting is both Bitcoin and the S&P have not reached their upper channel lines. And if you want to watch my latest Bitcoin video, I'll link it at the end of this one, and I show you a very similar looking channel to what we have on the S&P 500. They both reach it by January, and it could be that if we get momentum flipping back to bullish all the way around here on the S&P with a bullish reversal of conditions and clearing this trend line, or pulling back a little bit and then clearing it, very well over the next 3 weeks could again rally. We could rally towards inauguration day, and it could be a sell the news event because on concerns of inflation, the tariffs, the tax cuts. Now, no, we've had the tariffs before, and we were told there's going to be all this inflation. It didn't happen. But regardless of whether it does or not, it's the belief that it will happen. It could be a sell the news event. And if we go higher, we could rally to the upper channel line on the weekly chart. Watching to see, do we just have a successful back test right here, and we're going to get a bigger sell-off to come back and fill the gap or test horizontal support? Or again, even if we pull back, do we still attempt to go higher? And does this low right here hold? Or do we just try to plow on through it right now? We've had a rebound, recovering the losses here, the Fed sell-off. But again, I'll be watching to see if it continues. Again, light trading volume here over the holidays. The market can be easily manipulated, so we'll be watching. But we have recovered. Big rebound back up after the breach of that trend line. See if we hold above the 50 or not. If we get back above this trend line, or if not. So again, the support levels down here that I'm talking about, the resistance level with the trend line right here, and the peak over here, our recent top. Now I'm continuing to watch momentum. Here we still have the cloud red, and the bars turn back to red. They tried to turn back to blue here, reflecting the trend, but just kind of rebounding. We've recovered the sell-off that we've had with the Fed, which was this big, ugly red bar right here on the S&P. We've recovered losses, but we're still back testing the trend line. Now we've got to get a green awesome oscillator bar. If it can go into positive territory, again, you could get a divergence that could end up setting up here. That is very possible. But if we go back and we sell off more, or getting a higher low or a lower low, then there's risk of coming back and filling the gap back over here. We're hitting horizontal support going here, or a 200 period moving average. So again, fills at 57.83. We'll be watching that. You did get a green bar here today, but you didn't flip your cloud. The S&P was pretty much flat. The S&P is above 6,000. So is this a pullback going to new all-time highs? My guess is it likely will be. It could be a deeper pullback, or is it a start of a reversal, as some think it might be? Guess is we're still going to see new all-time highs on the S&P. I could be wrong about that, but again, I have the guts to tell you exactly what I think, and I continue to tell you my target. The trend line in the weekly time frame has not yet been reached. We did reach my monthly trend line target, but I told you I thought we'd overthrow that. Did, but again, we'll be watching to see if we still reach that weekly trend line. We'll be watching that closely. Green bar, though, here on the Awesome Oscillator daily chart. We get our second red bar on the Awesome Oscillator here. And again, oftentimes you'll see a rally back up on a counter trend, which is what we're possibly getting off of our 10-week moving average here, the red line. Or you can even go to new highs, and you can still get this multiple point divergence forming here and on the MACD here in the weekly time frame for the S&P 500. Nasdaq 100 has not yet gotten a red bar, so again, we'll be watching to see if it still goes up and tries to make a new high. It did just come shy of reaching the upper channel line, while we did see the Dow and the Russell both hit those upper channel lines in the weekly time frame that I've talked so much about. We still have the divergences in place here, but again, as I've said, they very well may not be done yet. The jury is still out. If Nasdaq can make a new high, we'll be watching, but we'll be looking to see, do we get a red bar here with the holiday trading, maybe next week, or into January as we move closer to inauguration day. And again, Nasdaq daily chart, if we can flip momentum here, we can see green. If we can start seeing green awesome oscillator bars, we don't have one on Nasdaq yet. It's still in positive territory with the awesome oscillator bars, but we did get that green bar on the S&P 500. So again, I'll be watching to see if we can flip momentum back to bullish here for Nasdaq. It's got to get back above the upper boundary of the cloud here, and we got to see that happen. So we'll be watching to see happens here. We're bouncing off the 50 period moving average. We got back above the 10 and the 20. The 20 is the blue, the red is the 10. We're back above both. The advances to resume, we have to get back to a bullish reversal of conditions. Green cloud, green or blue bars. Let's see that happen if we're going to try to go higher. While we haven't seen the cloud flip back to bullish with momentum yet on the S&P daily chart, we did get the momentum line now turning back to bullish here with this rally that we've had over the holidays here for this week. We've rebounded and recovered from the Fed sell-off, at least so far. Can we continue the advance, or do we end up having to sell off? Just to let you know, the momentum line is trying to turn back to bullish. It's got to be able to remain that way, and if we start selling off, it might revert back to bearish. It's got to be able to stay that way, back to bullish here, and then we've got to see that cloud with momentum flip back to bullish, get a bullish reversal of conditions that I just showed you. And we got to see momentum validate that by going into the positive region here. Right now, we're still in negative territory. So there's still risk of downside and filling the gap and going down and hitting horizontal support and hitting a bigger sell-off. But like I said, if we do, I still think there's a pretty good chance S&P is going to make new all-time highs, as I continue to say, because we haven't reached that trend line. I think it's likely the S&P is going to reach that trend line. In a sharp sell-off with the Dow and with the Russell, they attempt a recovery now. Possible we get that right here and now on the S&P 500. We'll be watching to see if momentum flips back to bullish with the bullish reversal of conditions. But we're doing it here. Can it remain that way? We'll see what happens. Do we have a back test? Now, our bullish diversion so far here in the 60-minute time frame has taken us back to the lower boundary, underneath the lower boundary here of the triangle. And again, we'll be watching. We did get above this horizontal level here. We'll be watching to see, do we get a pullback here? If we do, does this low hold, or do we go back and fill the gap down here at 57.83, or test horizontal support directly underneath that? So again, just some things to be aware of. Still may get a larger bullish divergence if we try to take this level out, but you got to flip the momentum, getting a bullish reversal of conditions if the advance is going to resume there in the daily time frame. These bullish and bearish divergences have done a good job in marking turns, as we've talked about at great length and detail here on the 60-minute chart. Now, size holding above 50, that's positive as long as it can remain there. MACD's in positive territory. So we'll see if we can try to clear this level, or do we get a reaction off of it. Now, I've talked about, again, the break of this red trend line here. It never got the confirmation and follow through. We broke it and it didn't happen. Here we've had this break. We got, well, I mean, can you call that a confirmation? I mean, you know, a couple of points below it. Not very convincing so far, but if we are back testing, then again, we'll be looking at these other areas, the gap fill and so forth, horizontal support. Even if we pull back and then try to clear this trend line and this overhead resistance, which we are now doing, we are now clearing this level slightly here in the last two trading sessions. If we can clear this, we can try to climb above the peak here and go towards that weekly trend line. And again, it's possible we see that happen over the next 3 weeks here, maybe before or right at the inauguration day, January 20th. It very well could be a sell the news event, as I keep saying. All the concerns about inflation. Again, we could form a larger divergence on the RSI right here. It is getting back above 50 with this rebound back above the 50-period moving average. We do have the MACD still holding in positive territory here. Again, it may end up going negative, or it may just turn back down and we get a higher low or a lower low and form a divergence. If that be the case, and again, still end up forming a divergence like that, even if we pull back or even if we go slightly lower and then get a rebound. It is possible it happens either way. If we still end up going to new highs, or again, if we could try to just keep going here, that is also a possibility. But I still think you've got a good shot. We're going to try to make new all-time highs. And like I said, it's possible we get a top in December here. Possible if we start seeing evidence of a reversal. But we can have this go on into January, but I'm looking for a peak in either December or January. In all likelihood, I think you got a good shot. The recession is going to show up in the first quarter. The Fed is going to freak out and they're going to panic because they're so arrogant right now. You got Powell out there at the recent FOMC meeting telling us that we have successfully dodged a recession. And again, we're going to have a recession. It's completely blindsided that it's about to happen. Why is that? Because their models are broken. Recession indicators that I show you and that I talk about, they ignore them. You know, the uninverting yield of the yield curve, they tell us, oh, rates are normalizing now. I mean, all kinds of complete nonsense. Deepening of the yield curve, what they say is normalizing, what you get before the recession and right before your sell-off a stock market top. Watching, do we have a back test here at the 6,000 area, get a bigger sell-off, or again, are we going to attempt a recovery and resume the advance? And I think either way it plays out, I think we will end up moving to new all-time highs. See clear evidence, divergences are going to play out immediately in the weekly time frame. So there you have it, the daily chart here with momentum. Do we end up having to get a bigger sell-off and going down to extremes here before we find a bottom? And I've drawn a parallel boundary here to this upper boundary right here. If we in fact end up reaching that level, if we do go lower, do we form a divergence around our 100-period moving average, which would be just above this horizontal support area? So that's certainly still a possibility, and we don't want to rule anything out. But it is possible that if we attempt a pullback and we don't go down there, and we still try to go higher or do it immediately, you might still see a divergence develop right here and right now here with this low holding. So just some things I'm watching, the 100-period moving average. We back test this broken trend line. After that big sell-off last week with the Fed, we're now up 1.80%. P's up just under 109 points for the week. And again, we're holding above our 20-week moving average. We broke the trend line. Now we're getting back above it. Here we have the weekly chart. And again, talked about this for the last 8 weeks with, again, diversions that formed ahead of the election. They're early November. 8 weeks ago, that diversion show up just ahead of the election. 8 weekly bars back. And again, we didn't reach the upper channel line, this parallel boundary. We did reach the monthly trend line nearly 4 weeks ago on Black Friday, the very last trading day of November. I told you we were going to overthrow it and likely reach this trend line. At least I told you I thought that's what was going to happen. So far, it has not. I still believe we're going to reach this upper channel line to complete the blow-off top. I think that, we have this blow-off top here. I think it's going to finish, and I think it's going to finish at this upper channel line and create total complacency. And then, again, the rug pull. Now, as I've said, I could be wrong that reach it. Maybe it's close but no cigar. I told you I'm looking for a top in December, January. Haven't reached it here in December so far. We'll probably reach it in January. My guess is we will still likely reach it. Nothing has changed. Now, again, the trend line back over here, it was at lower levels. Talked about the 6100 area. We actually went up to 6100. We can go to the high 6100 area, and we never reached it. We went up to 6,099 was the peak, just a point under 6,100. The further right we go to the chart, on the chart here, the higher the trend line goes. So now that target level is rising towards 62, maybe 6,300. Still think we're going to new all-time highs. You're changing your target. No, the trend line's the target. Again, we haven't reached it in 8 weeks. Okay, we haven't reached it. We came short of it, or shy of it. Do I still think we're going to reach it? Yes. Number is not the target. The trend line is the target. I still remain bullish in thinking that we're going to reach it, the weekly signals. But by the time we reach it, we might be now between 62 and 6,300, somewhere in the 6,200 range or 6,300 range. We reach it by late January. But I think that you got a really good shot. We're going to reach this level. It could be over the next 3 weeks. I have something very interesting to show you that with that. We do end up seeing market peak out with inauguration day or just before. Sell the news event, concerns of inflation. Something very interesting to show you about that this weekend. Quickly, the Dow back testing the trend line. Again, does it pull back and then we try to go higher? Does it clear it? Or again, end up getting a bigger sell-off? We'll be watching if the Dow and the Russell can get a bigger recovery. Then we very well could see the S&P move to a new all-time high. The Dow could get a Fibonacci retracement for a lower high. Good chance the Dow peaked back on December 4th, as I've said. Did hit the upper channel line. The S&P did not. It still might get a divergence on the RSI. We'll be watching, as well as a histogram might form it. So again, we'll see if the MACD turns up immediately or if the histogram forms a divergence and then the MACD turns up. But we'll be watching trend lines, Dow testing the trend line just like the S&P. Same thing for the Russell. Can it recover? Does it diverge with the S&P, or do we go down further and hit this trend line in the 200 period moving average? Again, the Russell will often top before the S&P does, and they often diverge. Do we form a divergence here, or do we attempt an immediate recovery? We'll be watching to see how it unfolds. But right now, we're attempting to get a bounce surrounding these 100 period moving averages on the Dow and the Russell here. Again, NVIDIA is bouncing off the trend line in the weekly time frame. The weekly time frame here in the 20-week moving average. It's either going to get a lower high or it's going to go back up to this trend line and the major trend line in long term in that weekly time frame. Not this one up here, but the one I've talked about that we turned off of right at our peak there with earnings. I told you that was likely going to be the case. It was. This trend line breaks and we could bounce off of it and break it. Could come back up, make a lower high, break it, or a higher high and break it. Or we could just try to break it sooner rather than later if we try to get a top in December or right after New Year's Day. But again, I think that when this trend line breaks, I think it will terminate the bull market. But you could see NVIDIA try to go back up to this upper boundary or get a lower high. It's got a possible head and shoulders on it. We'll be watching to see how it unfolds here at these divergences, though, are telling us, hey, we're likely going to see a reversal with NVIDIA in the near future. Breaking of this trend line will terminate the bull market, will terminate the AI rally and terminate the rally with NVIDIA. No, this time's different. Balderdash. That's what they said about the .com stocks. It was down about 0.2%. It's testing our 50-period moving average of 10 and 20 have dropped below the 50. Again, possibly in backtest mode here. But again, you've got the head and shoulders. Again, we could consolidate further for the right shoulder, or again, may try to go back up and hit this trend line, which would be that trend line in the weekly time frame. If we pull back and eventually make it up here, rally above this high, then again, you can still see a 3 drives to a high pattern. And again, either way it plays out, I think NVIDIA is in a topping process. ACD is curling back up right now, so again, we'll be watching. And we bounced off of levels just under the support area right here, got a hollow red candlestick there. So we'll be watching if we can get a bigger recovery. NVIDIA's rebound has helped the Nasdaq back up. Again, it tried to breach the trend line right here. Again, bounced off the 50, no confirmation, no follow through. We broke the trend line. Here with our linear scaling, just on an intraday basis, with our log scaling, we slightly breached it there. And also, if we exclude the trend line, we slightly breached it and then got back above it. If we exclude the shadow here, I should say, we slightly breached it right there. But again, Nasdaq could be expanding the boundaries. I drew those in. Another chart, let me show you. Here it is. Again, momentum. Same thing with S&P. If we get a bigger sell-off, we can come down to extremes and then turn back up. But if we try to recycle back up, again, you might form a divergence here in the coming days ahead. Here. And again, we're trying to bounce out that 50. I've drawn a trend line from that low there. And then the upper boundary right here, I've just connected the peak here and our recent peak here. Sometimes Nasdaq diverges with S&P, and we still may see something like that happen. I think S&P is going to move to a new high, and maybe Nasdaq does too, but it's still possible they diverge before the top completes. So keep that in mind. They did back over here in July. They did back in 2022. The S&P moved to new high. So just keep that in mind. Oftentimes they will diverge. Not always, but sometimes they do. It's something we should be on the lookout for. Bounced off the 50, back above the 20, the blue line, back above the broken trend line, back above the 10 period. We'll be watching to see what happens. We were down 29 points, 0.13%. And the market more or less flat today, day after Christmas. Had these divergences on the 60-minute chart, and that's given us a sell-off right here. And we sold off 5.5%. We came down here, we filled the gap right here, and we rebounded back up. And now we've seen this recovery. We haven't, like the S&P, recovered most of the losses there. We didn't cover them all here from the Fed sell-off, but we've rebounded back up with our bullish diversions right here. And again, it could evolve into a larger divergence. Could get confirmation of a higher low if we come back and fill the gap right here. We'll be watching to see. But if we just plow on through and keep going, then we'll be watching to see if we come back to fill this gap over here and take out this high. It was just shy of that upper channel line. Nasdaq Composite reached it. Pardon me. Trend line. Nasdaq on the channel. Nasdaq 100, I should say, just shy of that upper channel line parallel to this lower boundary here with this low right here and this low right here, but still may reach it. And this is the linear scaling. On the log scaling, we have a channel, actually a rising wedge that's even higher right here from this peak here and the peak over here. Still may reach that level. You have divergences in play. The other trend line, we did move above it right here. This is the parallel boundary from this upper boundary right here of 2021, the peak in 2021, the pandemic low, and then the 2022 low. We did move above that parallel boundary just ever so slightly. Nasdaq Composite did not. It hit it and slammed right into it. Interesting. So this red trend line from the pandemic low to this low right here to this high right here, we stalled right there. Again, we still may go higher and flirt with it some more, or again, end up reaching that upper channel line that I talked about. Could take us closer to this trend line, which we were just right under it. Kind of hard to see on this chart, zooming out here, but we were just right underneath it, as you saw a moment ago on the close-up. And Nasdaq Composite, all-inclusive, did reach this trend line. It still may go overthrow it, and we got a possible rising wedge here in the weekly time frame. But we did reach it. parallel boundary to these lows back over here,